You are looking live at a weekly chart of the Nasdaq. Welcome to my weekly review. And I just want to point out a couple of things with the index here, which is the leading index. You know, the Russell's really having a hard time, and the Dow is struggling. But these large cap tech stocks are carrying the S&P and the Nasdaq. The Nasdaq was up 3.24%. Last week, 556 points and closed at 17,688. And you can see the low here of 15,222 was April 19th. The index has rallied 16% in, count them, 1, 2, 3, 4, 5, 6, 7, 8 weeks. I don't think the rally is going to die after 8 weeks. I believe we have some more room to the upside. But after a 3.2% gain, I believe probably, see some sort of digestion before resuming the uptrend. I believe we have maybe about 11 or 12 weeks or 13 weeks in this current rally, but maybe a couple of stall days or a pullback. It's going to correct through price or time, or digest its gains through price or time. You can see here it rallied on Wednesday following the CPI data. 265 points, 1.5%. That's like another follow-through day. And then on this day, it got up to, I'm going to zoom in here a little bit because I think this is important. It got up to about 8% above its 50 simple moving average. And we know when it gets above 6, it starts to get a little wonky. I mean, it can go to 8 or 9 or 10, but you just keep watching these moving averages and it's going to pull back a little bit. Like I said, it'll correct through price or time. And you could see it advanced on Thursday and Friday, but the moving averages it crept a little closer. If you look at the the 10, it was 2.6 on this day, 2.4, and now 2.1 after Friday's gains, right? So even though the index is moving higher, these moving averages are moving faster than the sideways action. And anyway, you can see it on all the moving averages there. Even though it went sideways, it's getting a little closer to the moving averages because the moving averages are moving faster than, the sideways action. So if it goes sideways for a week or two, that's great. Allow these moving averages to catch up. We always want our stocks to go higher and the index to go higher, but, sideways action would be good. And, if it corrects through price, then it'll come right back down to the 10 or even the 21. Nobody really wants that. But there's a lot of negative people out there that do want that. So anyway, I just wanted to point out on April 19th, it made the low of 15,222 and closed at 17,688, a 16% move on the Nasdaq here in that 8-week span. So the Nasdaq is in a power trend. This is a special time. This is when we should be stepping on the gas. You want to step on the gas when we have these kind of moves, and you step on the brakes and you slam on the brakes or get out completely when you don't want to absorb this 10% correction. Anyway, so we're 8 weeks into the new rally, and I'm just going to leave it there. I'm not going to look at the S&P or the Dow because we're into stocks, and the mega cap tech stocks are what drives the index, the Nasdaq, and a lot of these large cap tech stocks had phenomenal weeks last week. And we'll take a look at Apple after WWDC, the developers conference. The market decided that Apple has an AI plan. And you can see the base on base pattern here on the weekly, and it broke out above that level right there. I thought it would have trouble at 200. Shows you what I know. It just blew right through it like a hot knife through butter. So what we want it to do now is to stay above the 200 level. We don't want it crashing back down to the below 200. So allow the moving averages to catch up. Trade a little sideways action. It did fill that gap there on what was it? The 11th, 207. The low on the 12th was 206.90. So filled that gap in the last couple of days. Just had an inside day on Thursday, and I just gave a little bit back on Friday. So Apple looks fantastic. Another stock that I like in the mega cap tech group was Meta Platforms, setting up in a base. As you can see here, the pullback after the really solid earnings report, it's 23, 25, 27% sales growth. But the market decided to sell it because they said they're going to spend a lot of money, which will benefit some of the other large cap tech stocks, which I'm going to get to in a minute. But Meta looks good above moving averages. Yeah, I know the 50 is kind of, going sideways, but Meta looks good setting up in a base. Having a little trouble with that 500 number. We have stocks that are having trouble with these, round numbers, which is the Jesse Livermore theory. Anyway, I'm going to move on to another stock in this mega cap group, Google. Just trading sideways, but it was up nearly 2% last week. Yeah, 1.34%. Google doing nothing wrong. See the earnings line heading due north, and Microsoft is another one of these large cap. It was up 4.4% and really broke out of a base. You can look at see this earnings line. It's heading gradually north, was what we like, and this is just consolidated in a base, and now it's trying to break out. So, yeah, I like Microsoft right here, right now, and of course the big one that everybody owns and everybody talks about and everybody likes is NVIDIA. Really surprised with the move here on following its 10-for-1 stock split. This is my largest holding. You see the earnings line just heading due north, and the stock is heading due north. It's amazing how that happens. But a 9% gain following a 10-for-1 stock split, pretty incredible for NVIDIA. Now trading at 131.88 was the close on Friday. Yeah, so NVIDIA looks fantastic. Probably needs to pull back a little bit, kind of like the index, but it's going to do what it wants to do and not what we want it to do. So pretty easy hold right now. Broke out of this base here. It was 500. Now on this 10-for-1 split, it's 50. Then ran up to nearly 1,000 or 97. Consolidated in this base, and now it's doing it again. It's trading higher with its 3.2 trillion market cap, which inflation adjusted is not that impressive. Anyway, last week we had some earnings reports, and AI was a big factor. Now we're starting to see the AI effect in the balance sheets. Oracle reported earnings weren't that great, but the stock responded. You can see it broke out of a base here on the weekly, up 9.7% on the week. And that's a move not to be ignored, Dan. This massive gap higher of 13% with volume. Pulled back the last couple of days, and we don't want to see it trading below the low of this day, 133.96. So if it gets down there, then it gets into gap land, and that's no bueno. So we'll just have to watch Oracle and see what it does. Adobe, another software name. So the software's picked up last week. They had been getting crushed, and you have to be super selective in the software group, because if that doesn't have an AI component, they're probably not going to be doing well. I could show you a few of those, but Adobe on Friday, gap 14%. It had sold off. You can see it's just in a base here. It had sold off because the prior earnings were not up to expectations, but this recent report beat expectations. So Adobe had a nice pop. And the other one, large cap tech stock, is Broadcom in the semiconductor space. Part of the QQQs. This is an important stock in the semiconductor fabless. I think it's the second biggest one in fabless after NVIDIA at 804 billion. So yeah, nice gap higher. Another move not to be ignored, Dan. And then followed up with a 3.3% gain on Friday. So there's a lot of buyers on Broadcom. You see the accelerating sales growth, 4%, 34, 43, and they had a big AI component as well. And I think they raised guidance from 50 billion to 51 billion, which is just a 2% raise, but Wall Street and rewarded Broadcom. Okay, today I just want to look at some of our leading stocks and some of the stocks I've had on my ready list that have done really well recently. And I'm going to begin with Spotify, which has been on our leading stock list since November 4th. Put it on at $169, and it's done really well for us. Spotify is one of those, kind of like Netflix, where people, gotta have it. They want to have their music fix, and they're subscribing to Spotify. It's just consolidating in a base right now. But if you look at this moving average here on Spotify, it just keeps making these higher lows. You know, every time it comes down, it finds support at the 50, and the 50 is rising. So as long as the 50 is rising and it finds support, the stock's going to go higher. When it slices the 50, then you got to look out below. But for right now, this looks like it's just consolidating in a base. I like it, you know, anywhere between, I don't know, the buy point there, the pivot area is 319, but I like it anywhere between 300 and 319. Why not? It's like I say, as long as it stays above its moving averages and the moving averages are rising, the price is going to rise. So it stands to reason. All right, I've got to get to some of the other stocks that I've had on my ready list. We've been just having a great run here during this uptrend. This is Micron, which gapped higher following its earnings, set up in a base, and it pulled back here. A nice shakeout with Micron here down to the 50, and they just blasted higher. I believe there was an upgrade, or one of these firms came out and said that this data storage group's going to do, I don't know, a certain percentage better than expected. So they went higher. But what I'm interested in is this earnings line, and it looks like, because this is a cyclical business, and these stocks are cyclical, and now the cycle is heading north. So I'm expecting this earnings line to continue higher. They report earnings on the 26th of this month, so it's coming up and something to look forward to. Also, Pure Storage was on our ready list. It's blasted out of a double bottom base, and it looks like it just wants higher prices as well. They reported strong earnings, and you can see the expected earnings coming up for Pure Storage. So this group has turned the corner and is in an up cycle. You can see this is Western Digital. This is sending base here. Then the cup with the handle, and it's just riding its moving averages higher. So as long as the moving averages are rising and it finds support, you're going to see higher prices in Western Digital. I had all four of these on the ready list recently, and they've just been super strong stocks. It is the top industry group here, rated by Market Surge. There's a double bottom base in NetApp, and just surfing like Kelly Slater on its 10 EMA. It looks fantastic. Once again, the earnings line is heading due north, and the stock is heading due north. And anyway, that's it for the data storage group. I got to do the drugs, starting with Lilly. Lilly had 2 drugs approved last week, one for Alzheimer's, which was much ballyhooed by the financial media, and rightfully so. But it broke out of a double bottom base and now is trending higher. Thursday, they had a thyroid cancer drug approved, and nobody made mention of that. But I expect Lilly to continue with these 20% earnings growth, the sales growth for this stock. They have quite the catalog. And I expect this earning lines to continue higher. I think Lilly will be your first trillion-dollar drug stock. I know it's expensive. I know there's lawsuits. Every drug company has lawsuits and headline news that you don't like to see, but we just like to see the stock go higher, and that's what Lilly's doing. Novo Nordisk is another one in the drug group on our leading stock list. It's set up in a base here, cup with a handle, and this one has a lot more overhead supply. It's got 3.4 billion shares, so it's got a lot of supply. Takes a ton of demand to move it, but you can see the earnings line heading due north. They said that they were signing up 25,000 people per week for Wegovy or Ozempic. I think it was Ozempic, and so they have to have enough supply of drugs, have to be able to manufacture enough to take care of their patients. You could see their sales growth, 39.41. It dipped to 22 last quarter, and I think the CEO said that, they expect about 19%, 16 to 19%. So they'll probably beat that, and you'll probably see 20% plus for a few more quarters as they round out their year. But it's a gappy stock because it trades overseas. You can see the big gaps here. So when it trades in the morning, I've noticed, it'll be down in overseas action. It'll open up down in the US, and then it starts getting bought up like this day here, opened up lower, traded lower, and then, it gets bought up. And a gap down lower on this day, and it gets bought up. So here, it gap down lower, and then buyers come in. Here, same thing, trades lower, and then, you know, buyers come in. So that's, you got to watch it in the morning. If it's down in pre-market, that doesn't necessarily mean that it's going to be down for the day, because buyers in the US are not the same buyers as we see overseas. So it is gappy on the upside and the downside. And so you just got to be patient with this one. And if you just look at the monthly, and I know, you know, past performance does not guarantee future results, but, you know, this one has been a monster for a long, long time, and just a real steady company. And the CEO did say they're going to be aggressive in acquisitions. One other stock that we had on our ready list, drug stock, recently is Vertex. You can see the base here, the cup. It just had like a 3-day shakeout here. Vertex did, and then just blasted off its 21. Vertex, it's really strong stock, very difficult for me to trade. But once again, if you look at the, you know, the monthly here, you can see it's been a big winner for a long, long time. And the biotech medical group is what, 33? Not bad. I thought it was a lot worse than that. A lot of their stocks have been struggling. All right, I'm going to move on to the only stock I'm interested in, the cybersecurity names, and that's CrowdStrike. We had this on our ready list, I believe, the old 338 we used, and then it kind of, you know, made this cup and handle, nice shakeout below the 50 before earnings, and then after earnings, man, this thing just ramped. 33% sales growth, you know, strong earnings growth. Yeah, it's expensive. They're all expensive, and multiples will be expanding as the you know, the rates allegedly are going to be coming down. Well, they're not going up. Anyway, you can see the earnings line going up. You could see the relative strength line blasting through the moving averages, and you can see the breakout here. Just a real strong stock, up 10.4% last week. CrowdStrike is doing fantastic. I'm not even going to look at the others because they look sick. Sentinel-1, Palo Alto Networks is a big one. Just it's forming a base. You know, you could say maybe here, you know, take a swing, but that's not my style. I would just rather, you know, own CrowdStrike. And that's just me. Fortinet is another one. As I said, I'm not going to go look at these ugly stocks. Yeah, Crowd's the only one I'm interested in. All right, I'm going to move on to the retail apparel shoe group. Deckers is kind of the leading stock in this group by, you know, market cap and by, you know, sales and earnings growth. Nike is the big kahuna, but Nike looks sick as well. And since I'm talking about Nike, I got to go to Nike. You know, Nike is not innovating, not seeing, you know, they're kind of relying on their Jordan shoes, and, you know, Jordan hasn't played basketball in 20, 25 years. So Nike stock looks ill. As you can see, it's a clear downtrending pattern here. It can't get out of its own way. They need to innovate, you know, but because they're having a market share taken by these companies, which I'm more interested in, a leader like Deckers with their Hoka shoes and their Uggs, which is, it was kind of a seasonal shoe, but now they've branched out and they've broadened their offerings, and Uggs is another powerhouse brand for Deckers. Anyway, it broke out of this base, looks like 3 weeks ago, following its earnings report. Now it did get back a little bit the last couple of weeks here, but yeah, nice 16% move. Traded higher the next week, 6%, and gave back 4% and then 2% last week. So Decker is just a real strong name in the retail apparel shoe group, which is another one of the top 5 groups. On holding, again, taking market share from Nike. I mean, you see these shoes all over the place, and you know, the CEOs from both companies are talking about how it's blended into casual wear, not just for runners or athletes. You see grandma and grandpa wearing them. You see kids wearing them. You know, you see them all over the place. You know, if you go out to the mall or out into town, yeah, On holding, very popular shoe. This stock broke out, and if I got to go to the weekly, because this is just, you know, it's in an IPO base essentially, and now, you know, moving out of its institutional due diligence phase, and it's in its advanced phase. Although the last couple of weeks it's been down after the move higher, down 0.5% and less than 1%. So that's not much give back after the breakout. On holdings looks good, supported at the 10 there. It looks fantastic. And the last one in the group that I'm going to cover is CROX. I don't have this on our leading stock list. I did have it on our buy list last week, our ready list. And this thing, what happened here is that formed a cup with handle. There you see the shakeout down to the moving average, and then the breakout, and then it pulled back again to its old pivot point. So I said, hey, the second mouse gets the cheese. It's giving you a second chance to get in. And it just pulled back to the 21 and bounced higher last week. What a nice 7% move. We'll take that every week. So good trade for CROX. And of course, I like the stocks because our friend Mike Webster calls me Mr. CROX, not because I like this shoe. There's other reasons for that. All right, the retail restaurant group. Chipotle is splitting their shares 50-1, and everybody likes a split these days. So, Broadcom did it, NVDA, so Chipotle, I believe, was one of the first ones, and you're going to see other stocks that I mentioned earlier, like Lilly, they're going to split their stock, I'm sure, and Deckers. So it's working, so companies are going to do it. Chipotle Mexican Grill, this is not an AI stock. This is your burrito stock. You can see this for 3 weeks type, real flat, like shelf type pattern here on the weekly. There you see it on the daily. So this is, I believe, when they reported earnings and they announced the big stock split, I believe. When was this? Was it March? No, it was later on than that, right? April 25th. Okay, so it's formed that little shelf type pattern ever since. Pulled back to the 51 times. I want to see what this looks like after this 50-1 stock split. That is a massive, massive stock split. So anyway, we'll have to see how Chipotle does. But I do like the group. Chipotle is kind of the, one of my favorites in the group. But I also like Dutch Bros. Been to Bros recently. Very popular. Definitely taking market share. Like Deckers and On Holdings taking market share from Nike. Dutch Bros taking market share from Starbucks. I don't think there's any doubt about it. If you look at the, they came public right before the Fed started raising interest rates, and they had the Fed-induced bear market. So this is just kind of like, breaking out of a stage one, Weinstein stage one base, but still really it's in its IPO base. And we've seen other stocks in the past take 3 years to break out of their base, like Snapchat. So Dutch Bros is definitely an interesting stock for me. It was up only 0.5% last week, but it had a big move, prior to that. And you could see the earnings line was just heading due north. And you could see these breakouts here, 11%, 10%, this big move off the bottom, straight up off the bottom. So it takes some time for it to pull back to moving average. And now, the last couple of weeks have been chugging higher. But I did mention the earnings line, and there you go. And that's what's going to drive the stock higher, these earnings. So they're just spreading out to the eastern seaboard, moving up. They're building in the south and moving up the eastern seaboard. They're eventually going to make it to New York. New York, you can make it there. You can make it anywhere. So a lot of growth ahead for Dutch Bros. SG is another one. By the way, I think you could buy Dutch Bros on that pullback. Gosh darn it, Marty, since you mentioned it. Yeah, that 38.17 area, that's an area of interest to me. The old interest buy point, kind of like Crocs, right? As it pulls back here. Let's see it pull back to the 21, which on Friday was 36.84, let's call it 37. So yeah, let it pull back a buck and we'll dive right in. That old buy point was 36.17. So somewhere in there, I'll definitely be interested. Embrace a pullback. All right, I did mention Sweet Green because I like the way this one has been acting. You can see it blasted higher following its earnings report on May 10th. And then now it's just kind of gotten to this sideways kind of shelf type pattern, support at the 21, where it's visited a couple of times here. Yeah, I like this one here. Yeah, pull back following, there's going to be profit taking after a move like that, but you could see consistent support at the 21. So let's see a bounce here. I would like it above, 34, 45. We could trade above there. And realistically, I mean, what we'd really like to see is it blast above that old high, 36.72 from the week of June 7th. So prior to last week. Yeah, it gave back 2-something% last week, but still an area of interest, just bouncing between like 30 and 32. So it's been, blasted up higher this week. May 10th week, 40%, we'll take that. Then 1, 2, 3, 4, 5, 6. It's been 6 weeks in a little like flat base pattern there. So sweet green, definitely another one of interest in the retail restaurant group. CAVA is another one. I'm just going to go through these three. There's kind of like a paradigm shift in US, dining habits, and they're definitely going to a more healthier, offering. And this is CAVA Group, and it's a weekly review, so I got to look at the weekly report. You can see the earnings line just heading due north, relative strength line. This looks fantastic. Kind of broke out of that IPO base here, went up, revisited it, and then boom, traded higher. There was some report that some insider sold or something, but I just look at it technically and not too much on the headline news. So, strong sales growth. I know it's an expensive stock, but the theory is that these stocks, these growth stocks, will grow into their valuation. So don't pay too much attention to these PEs or people saying it's too expensive. Yeah, because what is expensive may get more expensive. All right. That's enough of that group. I've got to go to more retail names, but not the retail restaurant. I like Elf Beauty right here. I've always liked Elf. It is a late stage base, as we could see on the monthly there, breaking out of this IPO base a while back, just ripping higher. There's only a couple of months there where it gave back anything, and you could see it on the weekly here. Base here, breakout, base here, breakout. Now it's basing again. So will it break out again? Time will tell. It says 15 weeks here in this base. That's a long time. Cup with handle pattern. I figured it would have trouble with this 200 number, and it sure did last week. It got rejected and pulled back, but a couple more sessions or weeks here around 200. It'll probably break out one more time would be my guess, but it's definitely one that I'm watching. And I know the 50 is, in decline. The 10 and the 21 are still on the upswing. It fell out and sliced the 50 with the Ulta Beauty report, but it has nothing to do with Elf. Elf brand is really hot. They're selling on Twitch, Roblox. They have 1.3 million TikTok followers. And you can see the sales and earnings growth. Once again, I know it's expensive, but it's going to grow into its valuation at some point. All right, so I'm going to X-nay this group. A couple of other areas that I like. TMDX, this medical product stock. You can see it gapped higher in its earnings report on this date, May 1st, and it's just, trended higher with its moving averages. Once again, like a Kelly Slater type move. It had a glitch in its earnings because, sometimes growth stocks, they have to spend money, to change their paradigm. And so they spent some money, improved their product line, and now the earnings line is blasting higher. Another one in this group that I like is Intuitive Surgical with their Da Vinci machines. Had a little problem during the bear market, of course, during the pandemic. You're not going to have as many, elective type surgeries, but now it just consolidated in this base here and is blasting higher. This is one that we had on our ready list. I don't know how many people bought it because you never know what people are going to do with their clicks of the mouse. They see a stock, oh, I like it, it's going higher, or I'm not going to buy that. So you never know. I could say, buy, and yeah, you never know what people are going to do. But anyway, those two I like in that group. A couple others I like. Netflix, we've had on our ready list, finally broke out. You can see the cup shape pattern blasted off of its moving average on Friday. So there it is. I think, God, most people have Netflix, and that's kind of like Spotify. You're not going to cut this service, right, when you subscribe to it. So Netflix looks fantastic. A couple others before I go now is the cryptocurrency stocks. Coinbase, it's a leader. You can see base, breakout, base, breakout. Now it's basing again. It's a late stage base. I realize that, which are more prone to fail, but it's set up in a base here. I like it. I know the 50 is kind of going sideways, but if this thing breaks out and trades higher above that old pivot area, we'll see. 263.80 is actually the paint by numbers number that we're looking for to trade above. But some of these stocks are just super strong. MicroStrategy is another one. It's a Bitcoin related stock just set up in the base, cup with handle, had a nice shakeout, down near the 50 inside day on Friday. So we'll be watching for that one. 1740 is a paint by numbers buy point on this one, and you can see the base here, and you can see how much this thing's moved. This is one of the stronger stocks of 2024. So that's it for the crypto names, except for I have Robinhood. And this one set up on the base. We had it on our ready list, and it just jammed higher. Okay, that's it for me. Thank you for watching my weekly review. Except for I lie in honor of the great Steve Jobs, I have one more group I want to get to. And I believe there's only two names in this solar group to really look at. One is First Solar, which broke out of this consolidation, now pulled back to the 10 nicely. That's a nice shakeout. Yeah, for this one, it's kind of like a flag type pattern, right? Almost like a 3 weeks tight in here. So it's got these weekly closes, 276, 271, 267, 273. So just kind of flagging in that area after this nice pull. I'm not calling it a high tide flag, but that's a nice breakout with a flag. So First Solar is one in the solar group, and the other one that I like is Next Tracker, which is kind of a recent IPO. When did they IPO here in February of 23. So it's been, on the market for roughly a year and a half. And you can see it set up in this base here on the weekly earnings just heading due north. Yeah, this is a real strong energy solar group name. The group itself is not very strong. What is it, 41? Not bad. But you can see the consolidation, and it's near that paint by numbers buy point. I like Next Tracker, but I mentioned that there are some names in this group that just are not doing well. This is Solar Edge. I mean, this is dying on the vine, so you just got to be careful. This is still a stock picker's market. I just showed you a bunch of our leading stocks, but there's a ton of stocks out there that are not doing well, and you'll see people in the financial media just point those out, like a very thin market, narrow leadership. But if you stay with the winners, if you're a good stock picker, you can do really well in this market. But man, yeah, these solar names, ooh boy, that's painful. So yeah, it's a stock picker's market. That's my weekly review. Thank you for watching. I'll be back on Monday. I have a new ready list, but I gotta admit, there's a lot of stocks that have broken out and are extended. So the list is getting a little thinner. Thank you for watching at mcstockcharts.com. We never give up.